Today, let's talk about the massive sheds, the warehouses, and the logistics hubs that are keeping our online shopping habits alive. That sounds like way more fun.
Oh, I think so.
Yeah. And if you thought the industrial market was cooling down, think again, because that's what you're going to help us break down today, Mish.
Yeah, so we're going to have just a little sneak peep into what's going on over here. And I'd like to say, let's call this, we entering into the second squeeze. We had a bit of a breather recently with new supply hitting the market, but I think that window is closing pretty fast. And depending on where you are in what areas, let's go into it anyway. Let's dive into it and see.
Yeah. Well, let's talk numbers because you and I were having a chat in the green room and you said that vacancy is going to peak at just under 4% this year. Now, 4% to me sounds low, but you're saying that's the high point.
Well, yes, I think in the current market, we're going to say 4% is pretty high. And, this is off a report that I read that Cushman and Wakefield put out. And they're suggesting that it's going to peak at just under 4%, which is, that's going to be the peak. It does sound low, but then again, in my opinion, I would say low would be about 2% or 2.5%. So it's still very high in tight markets, but the real story is what happens next, because construction costs, I mean, if you think about it, they've just skyrocketed. I mean, and it seems like there's no stopping. In fact, I'm going to go back to the fuel costs, because the fuel costs is just fueling everything.
Absolutely.
Everything is delivered on vehicles. So,
yeah, well, I think, even more than that, I think I was reading just the other day that, don't 100% quote me on this, but I'm pretty sure it was Reese have put their, because everything's gone up in price so much with the fuel crisis, that the plastic pipes have gone up 32%.
Yep. Well, I don't know if this is fact, but, everything is driven by oil. If you think of manufacturing factories, what drives machineries? Oil. So is it a knock-on effect? I believe it's a little bit too soon. There might be a couple of opportunists out there in the market. So what can we do about it? We just got to keep moving, and this is just one of the ebbs and the highs that we're busy going through. Yeah.
Yeah. So if we're looking at vacancy rates dropping back down towards 2.5%, and if I was a business owner looking for a new warehouse in 18 months' time, how does that fare? Am I in trouble?
I reckon you're in major trouble, Sam, because especially if we're looking at Southeast Queensland, which is where we do most of our work, by the end of 2027, I reckon those vacancy rates are going to be really, really tight, being that we are on a race to a deadline for the Olympics. So,
of course. Yeah.
Yeah, I reckon ultimately you're really going to be paying more. And I always, when speaking to clients, I say to them, look at what happened in West Sydney. West Sydney was always kind of the cheap baby brother. But that was 20 years ago. And how much are you paying for those properties now?
Yeah.
They prime rents are forecast to be climbing. And what we're talking about prime rents is in classic sort of, central areas. And let's call it the pincer movement, where supply is falling because it's too expensive to build. The demand is rising because the population is growing. And I wanted now sort of delivery culture is exactly what you were talking about earlier. Is where's everything housed is warehousing.
Yeah. Totally. One of the other things you were talking about is a divergence between different areas. Is it the same everywhere?
Definitely not. So I reckon the biggest point made about this is we're seeing a split. If you're in the established precincts, and if you've bought previously in those established precincts, happy days. The closer you go to those city centers and those city hubs, the more valuable your land is. So your rent is definitely going to go through the roof. And, it's literally kind of because that's all there is. It's landlocked.
Mm.
So that's the age-old story with, if you're in the right area at the right time, you're purchasing the right properties, your properties are going to go sky high.
Mm, mm. What about the emerging areas? So you just talked about the areas that are close to the city. I'm also guessing you're talking close to airports and that kind of thing. Well, that's a guess. Were you?
Look, pretty much, Sam, we're talking anywhere that's close to freeways, that's close to arterials that are going north, south, east, and west, to harbors, to, yes, airports, always very valuable. And your emerging areas, previously, I've always spoken about gray areas, and your gray areas are your areas around those emerging, or rather around those precincts that are highly sought after. And those areas are now being caught or captured into your central sort of areas. And the value of those properties are going sky high as well. They're going through the roof. So, yes, you'll see it. It's kind of like a ripple effect that goes out. And I guess the bottom line is, if you can't afford to be buying in the central areas now, you've got to be looking a little bit further out. And for tradies and businesses, they're actually looking to relocate, and they're trying to locate on those transport systems.
Mm. So you just mentioned Southeast Queensland. Let's talk about Queensland. Why is everyone looking at the Sunshine State right now? Is it purely the Olympics? Is there something else at play?
Look, Sam, I reckon it's there's a lot of migration that's moving into Queensland, Southeast Queensland in particular. I mean, Queensland is kind of the sweetheart state at the moment. So you've got a lot of migration moving north, and there's a lot of preparation for the 2032 Olympics. And just think about it, with a lot of, if Southeast Queensland is delivering a lot of work, we need a lot of trade, we need a lot of supply. Those supplies have to be housed in warehouses, in houses, homes. They need doctors, large format retailers. It's a whole
The
knock-on
entire
effect.
infrastructure. Yeah.
Infrastructure, yeah. So it's a whole growth storm that's busy happening at the moment, and I don't see it slowing down anytime soon.
Mm. Interesting. So, for people that are listening, that are looking to invest right now, what can you say about, or what can you speak to around industrial?
I reckon industrial is still the sweetheart of the country.
Mm-hmm.
It's the sweetheart of the sector. I think there are a couple of seconders running up. I mentioned large format retail. We do like retail. And when I say large format retail, think of Bunnings, for instance. I'm throwing it all into the same sort of sector. And you've got your Sydney Tools, and you've got those kind of retailers are opening all over. But where are they opening? They're opening in industrial type buildings. So industrial, maybe with showroom and that kind of thing.
Yeah.
So, yes, I don't see it slowing down anytime soon. And if you wait until 2027 to find a space, you're going to be fighting over the scraps. So I think the thing to think about over here is, if you're in the market that you're looking to invest in commercial real estate, think ahead. Buy now, land bank. And when I say land bank, whatever you're purchasing now, just purchase it if you can, because you actually are paying for your future. It really is an insurance for the future. So
What about if you're a tenant right now and you're already sort of in a lease, or you've got your lease renewal coming up?
I'd say lock it in for the next 5 years. That's what I'd be saying. If I was the tenant, or if I was negotiating on behalf of the tenant, I'd definitely be saying to them, lock it in for the next 5 years, and lock in your incremental increases. But then again, don't lock yourself out of the market, because in 5 years' time, you're going to be crying looking for other space if you haven't already made plans and or bought something, if that's, depending on where you're at.
Yeah, interesting. Thanks for that insight, Mish. For you that's listening, we'll put the full breakdown of the Cushman and Wakefield and the Knight Frank reports in the show notes below, so that you can click on those links and have a look. And thanks for listening to another episode of Revolve Commercial. If you found this episode helpful. If you want to hear more about what Mish has got to share coming up in the commercial space, hit subscribe and please leave us a review so that other people can find us and know that this is the right show to be listening to. Thanks so much, and we'll see you in the next episode.
Thanks, Sam.